Welcome to the Wellness Law Podcast, where wellness and the law meet for contemplation and collaboration. This podcast is brought to you by the Center for Health and Wellness Law. I am your host, Barbara Zabawa. Welcome, Valerie Schranz, to the Wellness Law Podcast. I'm thrilled to have you. I've been receiving your newsletters forever, it seems, and now I finally get to meet you in person and talk about tax and financial issues for wellness businesses. So everyone meet at Valerie. She is a brand ambassador for Sterling Tax and Accounting Services based in Sarasota, Florida. But as I learned, they're a virtual firm, so they serve clients everywhere, even though they're physically located in Florida, and they specialize in clients that are involved in the real estate, medical, and professional services industries. And that medical piece of it includes wellness practices and medical spas, IV hydration clinics. So a lot of the types of clients that come to Wellness Law for legal could also benefit from services from Sterling Tax and Accounting Services. So welcome, Valerie.
Well, thank you so much. I want to thank you for inviting me to be on the podcast and certainly hoping I can be of some assistance today. I speak with people every day, every single day, sometimes many times a day, who are just starting their businesses. We serve a small to medium-sized business, and we do specialize in healthcare. So I'm really hoping that your listeners do get some value today.
Oh, I think they
from
will.
what we're talking about.
I think they will.
Sure.
So the first question really is kind of a open-ended question. As someone who speaks to small wellness type businesses on a daily basis, what are some things that you see and that you recommend that they think about from a financial tax perspective?
Okay. Well, there's certainly many things, and we are definitely going to get into that. But one thing I want to say as a former small business owner myself that people don't realize is when you're starting out in business, especially if you don't have investors, it's great to know that there are free resources to you to help you. And before you call a CPA firm like ours, you may not be ready for that quite yet. And I'd like to just let you know that all of the major banks like Bank of America, Chase, Wells Fargo, many of them have on their website, have sections for small businesses where you can go and read all about some things that you need to know in terms of starting your business. So please take advantage of those resources. And also, of course, YouTube is a wonderful place for that. And then IRS.gov has an enormous section for small to medium-sized businesses that they're getting started. All of those resources are absolutely invaluable. And then, of course, with AI today, you want to be careful, but you can certainly Google many questions that you have and get pretty good answers. You want to double check that sometimes. But so anyway, so I do speak with people who are starting businesses every single day. So where do we start? It seems overwhelming, I know, but why don't we start with entity structure?
Mm-hmm.
This is how you're going to legally structure your business. So you can do sole proprietorship. You can make your business an LLC, an S Corp, a C Corp, or a partnership. So let's start with sole proprietor. With sole proprietor, you don't even have to register a business in your state, Secretary of State website, right? Now, if you're going to do an LLC, we'll talk about that in a minute. But as a sole proprietor, you are just doing business and everything flows through to your personal return. So that's the easiest way for sure. There's no question about it. But the thing to keep in mind with sole proprietorship is that you don't have legal protections to protect you from lawsuits, for example. And now so that kind of leads us into talking about an LLC. An LLC provides protection for you in case, God forbid, somebody felt like they needed to sue you, you yourself personally and your personal property is once removed from your business. That's the reason that many people set up an LLC. It's a smart idea. And, once you kind of get your business off the ground, highly recommend that.
Yeah, and I'll just
And what
add
an LL
that if you do create an LLC, whic I also echo and recommend from a legal standpoint, make sure that when you're entering into contracts with your clients or with other vendors for your business, that you're entering into those contracts as your LLC and not you
Yeah.
personally. So keep it consistent. If you create the LLC, use the LLC. Think of it as a separate person that is going to be working on your behalf, and you are personally are not going to be opening bank accounts. You personally are not going to be entering into contracts. You're going to use your LLC to do that.
Great advice. Absolutely. You always want to use your LLC when doing that. Another thing an LLC does is it opens you up to the availability to file your taxes as an LLC filing as an S Corp, as a C Corp, or as a partnership. Having that LLC status enables you to do that. So an S Corp, we'll start with that. Basically, an S Corp, now let me back up here. It's smart to start filing as an S Corp once you hit around that 100K range and above, maybe even a little more than that, because of course, it's more expensive to file a business return than it is a Schedule C. If you're not an S Corp, a C Corp, or a partnership, you're simply filing a Schedule C for your LLC, which attaches to your personal return.
Mhm.
But once you start filing as S, C, or partnership, which is a Form 1065, then once you do that, you're paying up much more to a CPA for your business return. And you never really want to try to file those on your own. They're complicated, and you definitely want to have the oomph of a CPA behind you to file those. So filing as an S Corp, save on your self-employment taxes.
If
And
your income, if your revenue from your business is exceeding $100,000.
well, yes, that's when it starts to make
Mhm.
sense. I mean, you could file as an S corp before then, but it makes sense financially to do it after your gross revenues are at about 100,000 or above.
Mhm.
So with an S corp, you also, S corp, C corp partnership also come with their own sets of rules and regulations, so it's a little more work. But with an S Corp, you need to file a reasonable compensation report. And your CPA would certainly help you do that. And the reason for that is the IRS wants to know that you are paying yourself a reasonable amount of money. Okay, not just, paying yourself $10 so that you can save on your taxes. They're going to look at your gross revenues. They're going to look, at different things about your business. But bottom line is they want to make sure that you're paying yourself a reasonable amount of money.
Mhm.
And you also, of course, would be on payroll because that's how the IRS knows that that's how much you're making. Then a C Corp and a partnership. C Corp is fairly complicated, and you're going to have a lot more paperwork, rules, and regulations to fill out for a C Corp. That's something to keep in mind. And you definitely want to get professional advice before you make that kind of decision, because there is a lot involved with that. And in the end, it can end up, maybe not being the best decision. Get a couple of pieces of advice on that, because you also cannot change it for a few years if you enter into C Corp status.
Yeah, I
And then,
happen to tell people who ask me about C Corp, unless you, especially people who are health coaches, for example, or wellness practitioners who are going to just be practicing by themselves, unless they plan on getting investors, which most of these types of businesses aren't seeking investors,
Mhm.
doesn't probably make a lot of sense for them.
Right. Yeah, this is a situation where you certainly need your business attorney or a CPA giving you guidance
Mhm.
before you start to think, oh, maybe I'll start filing as one of these entities. You definitely, because it's complicated. You know, I mean, I wouldn't know how to be a health coach, and most of you wouldn't know anything about being a CPA, and that's totally understandable. That's why we're here.
Right.
But just make sure that you get the guidance that you need. And then, of course, a partnership is if you have one or more people involved, and that also involves its own legalities between the partners as well as the entity structure itself. So just, making certain you get really good guidance. I always advise people to get two types of guidance, legal and financial, so that they're able to, put all of that information together and make certain that they're making the right decision for themselves.
Yeah. So, since you talk to so many entrepreneurs every day, how many do you think try to do it themselves before they come to someone like you for help?
Well, most people don't because they know. I mean, certainly people all the time, which is absolutely fine, sign up as an LLC on their own. They create their business as an LLC and register it on their state Secretary of State website. In Florida, it's called SumBiz. But in terms of the rest of it, most people know that they've heard about it. They think that might benefit them, but most people know they need good advice to do that. Now, unfortunately, what I occasionally see, and not often, is people get bad advice. And for their certain situation, that can happen. That's why I say make sure that at the same time you're getting the professional advice, you're studying it on your own, because there is so much information online
Yeah.
about, what it entails. I mean, a lot of information. So make sure before you even go to a professional that you've studied it on your own. And of course, there are books published about that too. And speaking of books, one book I'd like to recommend is It's Small Business Taxes. I'm going to just hold that up here. This is actually 2024. But if you are just starting out, this is a fantastic book. It gives you, now you're going to want 2025.
Yeah.
But I haven't seen that one published yet. But it's a really, really great resource for small business owners just starting out and for people who have been in business for quite a while. And gives you, that's by Lasseter. It's called Small Business Taxes by J.K. Lasser. Sorry, Lasser.
Oh, okay.
So certainly recommend that as well, because you want to be well informed going into the conversation.
Well, I'll make a note of that book resource in the description for the podcast.
Wonderful.
So you said a lot of people you've seen once in a while, people getting bad advice. Could you give an example of what you've seen as really bad advice?
Well, most of the time it involves a C Corp, unfortunately, because people don't realize yet, they're not realizing what they're jumping into. And, with an S Corp, in general, depending on what you're doing, you can't really hurt yourself. It's just that you might not be quite ready for that yet. C Corp is a lot harder to get out of. So I've had two people who I've spoken with who really, really regretted it. So, and, of course, you have to wait a period of time before you can switch over. So I can't get into too many details, of course, because what we do is so confidential, and I won't. But again, please just make sure that you're doing your own, own investigation, own investigative work, and that you're getting the information that you need from a professional.
Yes, a trustworthy source.
Mm-hmm.
So,
oh, go ahead.
well, I was just wondering if you had any other tips, like other than what type of business entity options there are, what other considerations someone who might be just starting out with their wellness business should have?
Sure. There are many. So we're going to start from the top and go down. One is failing to make estimated tax payment. When you own your own business, you have to pay quarterly taxes to the IRS. Now, if you're with a CPA and you're all set up, a good CPA is going to give you an estimated amount that you have to pay every quarter, and will give you sort of a coupon for that, right, to send in with your payment, or of course you can pay it online. If you don't have a CPA yet, Just go to irs.gov. It's going to give you all the information you need about making quarterly tax payments. So what can happen if you don't? You didn't realize it, let's say. You get to the end of the tax year and you owe all these taxes. And not only do you owe the taxes, you're going to owe penalties. So you don't want to get in that situation.
And
So that is
that's if you created a legal entity like an LLC.
exactly. That's when you're going to start, which most people do.
Mhm.
But that's when you're going to start really needing to, be paying attention to that. Make sure you make your quarterly tax payments on time and make sure you're putting the money away, by the way, during the quarter to do that. You'll see, you'll be able to estimate what you're going to owe. Generally, it's different for different kinds of businesses, but and in different, I think in different states, if you're doing statewide, that can be different as well. But that's just one thing to pay attention to for sure. And again, you're going to be able to find out all of that information online or even in the book that I just showed you. So another one that is huge, and I will say, Barbara, I see this all the time. People commingling their personal and their business expenses and bank account. They're paying things from their personal account. They're paying personal expenses from their business bank account. And that gets very messy. And that leads us into the area of bookkeeping. Please make sure that you start your business with a good, even if you're just using Excel, it's fine. But you want it to do it monthly. You want to keep track of your expenses, of your incoming revenues, and then label each of those. If you rent out a space, it's going to be rent, and then the electric bill, the phone bill, whatever it is. You can keep it very simple. If you have retail products that you're selling, make certain that you are keeping your invoices. And again, when you're just starting out, you may not do everything digitally, and that's okay. But just make sure that you're filing them and keeping them very, very organized. And one of the main reasons for that is expenses, of course, once you start doing business and actually taking in clients, you can write those off. So that's one reason to, first of all, to keep them separate because, CPA firms are all about accuracy and protection. They want you to be accurate in recording your expenses and revenues, and they want to protect you from the IRS, right? And so you want to make sure that those two things, the business and personal, do not get mixed up for multiple reasons, but mainly accounting, because you want to make certain, from your bookkeeping and your accounting, that's how we're doing your taxes. So we have to have accurate numbers to go ahead and put on your return. And having accuracy is what protects you from the IRS. And I hate to use the word protection, but it's true. If you've ever been, if you've ever had an audit, it's a little scary and you want to just make certain that all your ducks are in a row, right?
Yeah. And so I think that brings up a good point because often I'll talk to clients about making sure they have an accountant, but you mentioned bookkeeper. How important is it for, a solopreneur to have a bookkeeper? Is that something that most people can do by themselves, or do you recommend having someone do it for you?
Well, it kind of depends because first of all, it depends on how much revenue you have coming in and how many categories you have on your chart of accounts. Yes, of course. If you can start out hiring a bookkeeper, having a reputable bookkeeper who can use QuickBooks, which we recommend. We're a QuickBooks firm, and you can get started that way and you have enough revenue to justify it, right? Of course, we're always going to recommend that because bookkeeping is a profession and there are things to know for sure. But let's say you're starting out as a health coach and you're starting out with like 8 to 15 clients. You could keep track of all of that on Excel, right? And make it pretty simple. But let's say things start getting a little more complex and a little busier. And a lot of times what happens is people don't have time to do their bookkeeping. So that's the time to start. When you start feeling stressed out about doing your books, that's the time to get a bookkeeper because you feel like you don't have time. And of course, we all want our business to grow. We're all in business to have it grow, right? But when you can see you start bringing in quite a bit more revenue, then there is definitely an advantage to having a bookkeeper, just keeping everything straight. And again, as you're just starting out, you may only need that bookkeeper like 10 hours a month, but it'll be worth it for you if you have a good one
Yeah.
and somebody who knows what they're doing. Because when you come around to tax time, that's when that really starts to matter.
Yeah.
And you have someone doing your taxes and they can see your records and they're clear.
Yeah.
So, I do advise it, but it's an expense and, people will put it off and I get it, but and especially also payroll. Now, I don't know how many of you, really have payroll, but let's say if you have a med spa or a wellness center, certainly you're going to have payroll. Hiring a professional payroll provider like Paychex, ADP, any of those guys is a good idea.
Great advice, or tips, I should say. Okay, so we went through choosing a business entity, having a separate bank accounts, don't mingle your personal and
Don't mingle. Yep.
expenses and purchases. A bookkeeper once you find yourself not able to keep on top of your own book.
On top of keeping your records, which, let's admit it, that's not the fun part of business.
Right.
That's for sure. But boy, are you going to be grateful that you did a good job if you need it.
Yeah.
So,
are there any other types of considerations for new business owners?
yes. Now, this is if you have employees, misclassifying your, 1099 contractors or your W-2 employees. Now, I think that most of your listeners probably would have W-2 employees, but occasionally you can have a contractor come in and let's say you have a location and it can be something as simple like a physical location. It can be something as simple as having one person you've contracted to come in and deep clean your facility, which of course is very important. So you have a professional come in, but they're a one-person show and they need to be given a W-9 and be classified as a 1099 contractor. Now, if you have your receptionist and other people, of course, who are helping you in your med spa, then they're going to be W-2 more than likely. That's up to you to decide as the business owner, but generally that's the way it works. Those are W-2 employees. So making certain it's very important to the IRS that you classify them correctly.
Yeah.
That's super important.
And
again, there are penalties involved.
Yeah, not just with the IRS, but also with the state government.
Yeah. With the
Because
state, absolutely.
if you have employees, you have to pay workers' comp and unemployment and W-9 independent contractor personnel. You do not have to do that, and you don't have to withhold any taxes from their compensation, whereas you do with W-2 employees. And if you've misclassified them, and what it boils from a legal perspective, what it really boils down to is the amount of control you have over that individual's work. But if you've misclassified them as an independent contractor and they're really an employee, you could be you will be encouraged to pay for a lot of back taxes that you probably didn't pay.
Exactly. And don't forget with your 1099 contractors at the end of the year, you do have to file. So that's really important.
Yes.
That's something to learn about and know about for sure. And then there's payroll tax requirements. Make sure you know about those. That's very important. That's all I made a little list for myself here. This is important. I'm sorry. This is probably one of the most important. Okay. Filing your tax return. I know we all get busy. I get it. But filing late or not filing at all for years, and I do see that more than I want to, it's going to be really hard on you because once you let 2 years, 3 years go by without filing, let's say you just started your business, right? Let me give you an example. You start your business and for whatever reason, you just don't file. You forget to file. You don't have time to file. Something happened.
Are you talking about someone
Well,
who's created like an LLC and they have
yes, filing their taxes, like filing a Schedule C,
yes.
attaching it to your personal
Yeah.
return, especially if you have an S corp. I mean, your CPA is going to be on top
Yeah.
of that. But you can't believe how many people start a business, but then never file either their business return or attach the Schedule C for their LLC to their personal return. Well, I've seen people go as long as 6 or 7 years. And then, of course, your situation is this. You're paying a CPA to get them prepared and get them filed all at once. That's an extraordinary amount of money. And then on top of that, you have fees and penalties for not having filed for a number of years. You just don't get yourself into that situation. Just file every single year. And for a Schedule C, that's not, some people do that themselves on TurboTax. And if you feel like you can do that, great. If you don't, just, find an accountant who can help you. But not doing it is because then also you're always on the IRS's radar. They didn't file for a few years. Just don't do that to yourself.
Yeah.
Just file every year. If you need help, it's worth the money. And then you won't have fees or penalties or the situation where you're trying to file, having everything prepared and filed all at once, which is very pricey. So just make sure that you file your returns. And I emphasize that because you can't believe how many people I see, for whatever reason, and I'm very empathetic to it, but just for your own good, please file every year.
So do you see people who maybe file their personal return, but then neglect their business return? Is that often what?
I see it all, but mostly they haven't filed personal or business
Oh,
most of the time.
wow.
Yeah, that's what I see. So, just don't do that to yourself. There's no need. And some CPAs, let's say you're still early in business and, the revenues are okay, but they're not quite there yet where you want them. And you feel like, oh my goodness, I don't know if I can afford to file this year. Some CPAs will work with you and let you make monthly payment. Okay, so, don't just call a few until you find one
Yeah.
who will help, right? Because they're out there and CPAs naturally want to help you with finance. We're concerned about, especially, we're concerned about small business owners and we want them to be on track.
Yeah.
Right? We want them to have good accounting. We want them to file and to know all the rules that they need to follow. So,
Yeah. Oh, well, I think that leads to my last question for you. So all the things that you've talked about today, the business entity, the misclassifying employees, the making sure that you filing, your taxes, the bookkeeping, all of that stuff that we discussed. If someone wanted help in all those areas, would Sterling, your company that you work for, Sterling Tax and Accounting, be one of those resources that they could go to get guidance in all of those areas?
well, certainly. And thank you for asking. What we do is we help our clients with tax compliance, which is the preparation and the filing piece. And then we also help with tax advisory services. Tax advisory services cover actually creating a written tax strategy for you. There are many, many legal tax strategies out there that you can use to save you the most amount of money on your tax liability each year for your business and your personal life. And tax planning is deeply personal. You're looking at your business, of course, but you're also looking at your personal life to see where you can start saving on your liabilities. So with us, our tax advisory services layer on top of the compliance for the preparation and the filing. So it can really be worth it to have a great tax strategy. And most CPAs, if they're doing, strategy, if they're offering those services, of course, they're endeavoring to save you more money than you're paying them. And oftentimes it's much more. So, all depends on the kind of revenues you're bringing in right now. And then we also help with small business accounting. So bookkeeping, monthly bookkeeping, journal entries, reconciliation, review, and then sending financial reports like the profit and loss and the balance sheet at the end of the month. So, that's what you could expect from us. Every CPA is a little bit different.
Well, that's great and much needed services. And I'm so glad that we were able to connect and I got a chance to ask you some questions and you got a chance to give us some insight. So thank you so much, Valerie. And if people want to find Sterling Tax and Accounting Services, what is the website that they can look up?
Oh, it's very simple. It is Sterling, STERLING .CPA.
Sterling.cpa. Wow, that is easy. Well, wonderful.
Yeah.
Well, thank you again. And I really appreciate your insight. And so does the wellness law community. So thanks for being a guest on our podcast.
Well, I thank you, Barbara, and you're very welcome. And thank you also to all the wellness providers out there. We need you as much as you need us. So thank you for that.
Thank you for listening to the Wellness Law Podcast. You can find more wellness law resources by visiting the Center for Health and Wellness Law website at www.wellnesslaw.com, where you can also subscribe to our newsletter and follow us on social media. Until the next episode, stay well, stay hopeful, and stay legal.